The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. And joining us now for a conversation as we continue our coverage live from the Moving Iron Summit in Nashville, Tennessee, lead economist for grains and oilseeds with CoBank, Tanner Ehmke is with us here. Tanner, it's good to see you, buddy. How are you?
Wonderful, Jesse. Great to see you. Great to be here with you.
And I appreciate a few minutes of time. I know you're speaking here at the summit today and talking with folks at attendance about what's happening with the markets, and that's what I want to talk to you about right now. Harvest, I'd say, for all intents and purposes, pretty much wrapped up here in the U.S. There's some residual left, but we're done. We're at the finish line. And you made this comment to me, we're swimming in corn. We're swimming in soybeans. And I think the markets are definitely have been reflecting that, right, Tanner?
Yes, absolutely. I don't think that's any news out there with, the amount of piles that we're seeing out in the countryside. I mean, it's obvious. I mean, we've got supply burden.
Yeah.
And I don't think that's any news to anybody. I'd say the big surprise was how fast harvest went. We really brought this crop in very fast. The other thing I'm hearing from our customers is how dry the crop is. It's obviously been quite dry across the Midwest, and so the positive here is if we've got these growing grain piles out in the countryside, it's dry, and so the amount of shrink on those piles is going to be smaller. So I think that's the silver lining here of having such a big crop and such a dry harvest, is that storing the crop is going to be pretty easy, or a lot easier. You're not going to have as much shrink. You're not going to have as much rot. It's going to be easier to keep it on the farm. It's going to make marketing a little bit easier for the farmer. The problem, though, is that with a very dry crop, you do lose a little bit of yield.
Yeah.
That is the downside. And there's a little bit of give and take there on the dryness.
Well, and thinking about storing it on farm potentially, especially, let's talk corn first.
Yeah.
You know, thinking about, and I've been watching basis spreads. We've had good demand. How much of this product is going to have to move to town? Because I know that there are some end users out there who are looking for corn specifically right now, Tanner.
Absolutely. Well, no, I think that's the big positive story here is the demand side for corn and soybeans and wheat is very strong. And call it just a function of the marketplace. The market is going to scare up demand with low prices. That's just kind of how it works, and that's absolutely happening right now. We've got strong ethanol demand, historically strong ethanol demand, strong feed demand out in the western plains. You can see that basis bid really coming up for corn out in the west, like western Kansas, for instance, very strong, and that's helping pull up the basis for the rest of the country. The ethanol bids out there are very strong as well, and now you got this very strong exporter bid. So you got the trifecta here. So yes, we're swimming in corn. The demand is showing up, and I think that's the positive here, and we're seeing that out in the country. That's one thing the farmer can hang their hat on, is that we're going to anticipate strength in the basis going forward. Now, flat price, different matter. That's really going to have, if we're going to see strengthening in flat price going forward, it's going to have to be led by the cash market. We're seeing that happen right now, so hopefully potentially see that continue into the new year. Now, there's a lot of uncertainty there about the election today. There's that argument that a lot of this demand, especially from the export side, has been front-loaded because of fears of trade wars, and that would potentially happen more so under Trump than a Harris administration. And so that concern is that the strong export bid we're seeing today is going to go away later on because of all this front-loaded demand. But I still look at the market and say, Jesse, the market's doing its job. It's attracting demand through low prices.
Yeah.
And so I think the demand is going to be sustained because of those low prices, and we're seeing that in the basis right now. And I think this momentum will carry forward. Now, we're not going back to the days of $6 or $7 corn. Don't misunderstand me. I don't want to get anybody's hopes up that much. But I think the market is doing its job through stronger basis bids. That's going to create that environment for a stronger flat price going forward.
I'm hearing a lot of folks that are maybe more friendly the corn market versus soybeans right now, especially you think about South American producers. I mean, Brazil, they've caught up substantially with soybean planting, a lot of talk on the big crop there. So I feel like you get corn that's pushing 420 in lead nut futures, whereas soybeans can't really break the 10 handle in lead nut futures right now. I guess, what's your perspective? Are you more friendly corn versus beans right now? What do you think, Tanner?
I'd say the story is going to be stronger corn going into next year because we've got that sustained biofuel advantage here with ethanol.
Sure.
Those margins are very strong. But I am positive on soybeans as well. We're going to have to get through the South American growing season first.
Yeah.
Okay, and there will be some weather scares in South America with Brazil and Argentina, and that's going to create marketing opportunities. But we still got to look at those numbers down in South America right now. Well, we got some big crops coming, assuming normal weather, and got 169 million ton soybean crop in Brazil. That's going to be hitting the market sometime probably February. The only other thing I'd add to this, Jesse, is that because of the delayed planting progress, what that is going to translate into, I think, is going to be a delayed harvest season. And what that means then is we're going to have an elongated marketing window for soybeans and corn, both. Okay, so the Brazilians have been expanding acreage. They've been increasing their market share. They've been increasing their exporting season because of this delayed planting progress. I think we're going to push their opening window further out instead of late January. We're going to be starting to see that more pushed into mid February perhaps. So that gains us a few more weeks of export window for soybeans.
We're talking with Tanner Ehmke from CoBank, and you made a great point there that I think needs to be reiterated for producers is being nimble at these price levels and taking advantage of marketing opportunities. I think that's so crucial right now.
100%, yes. And I think, though, as it is here in the United States, when we have a weather scare in the spring, those are your best marketing opportunities. Same thing in Brazil and Argentina. You got to watch that weather down in Brazil for those weather scares, and that's when you've got to capitalize on it.
Absolutely. What about the global wheat picture right now? I know there's been a lot of chatter about what's going on in Russia, watching other countries, Australia, their crop, etc. I know it's been a bit dry here in the U.S. for HRW country. What's your feeling on the wheat markets right now?
Yeah, it's still dry on the plains, and crop conditions are historically low for HRW. USDA came out with their crop condition ratings here recently. They're the initial crop conditions ratings for wheat. Very poor start to the year, and I think the market is absolutely dialing that in. But it's a long ways to go between now and harvest, and a lot of things can happen. The HRW crop is going to be made once we get into April and May. That's the weather that's going to be really critical. So the poor start is obviously not ideal, but we can make up for it later on if those rains do show up. Right now, I think the issue is really what's going on with Russia. The Russians have put on some export restrictions, some export taxes. The Russians are trying to slow down that export pace. They did have a smaller crop. They don't want to push out too much wheat in fear of food inflation in their own country. And so that's one reason for optimism here on wheat. And then down south, you got Australia. They had a freeze, and so they've also had some dry conditions, and so that crop might not be as big as expected, but it's still going to be a bigger crop. That's on the downside. And same thing kind of working there in Argentina. They had some weather issues there. So once we get past the Australian and Argentinian harvest, and once we get into January, February, March, that's when I think we've got a window here because globally speaking, Jesse, we are still historically tight on a stocks-to-use ratio for global wheat. Mm-hmm. Now, this is a story that I'm ashamed to say I've been saying for very long, and I've been wrong. I'm getting tired of being wrong on this. But the trick here is, Jesse, you say it long enough, eventually you're going to be right. Yeah. But I think there's an opportunity here for wheat to finally really wake up. And given the tightness in world supplies, and some of the export restrictions we're seeing out of Russia, and some of the growing conditions concerns that we're seeing out there, I think there's an opportunity really for wheat really to come back. And so I think there's probably a bigger story there for wheat, perhaps more so than corn or soybeans.
If you had a final thought, we got about a minute here. What do you want to really remind producers as they're looking at their grain marketing right now?
Well, I think you said it earlier. You got to be nimble, and you got to be forward thinking. It's going to be hard to sell without a plan. Being reactionary in these times is never going to be good on your stress level, and so you market for the margin, not for the price. And so it goes back to running a business, really. I'm not going to tell people how to run their business, but you got to know your cost, know what your margin is, know what an opportunity looks like when the market presents itself.
And everybody's situation is different in some
100%.
way, shape, or form. So you got to know your margins and do what is best for your operation. As always, fun conversation. Appreciate the insights. Tanner Ehmke with CoBank. We'll look forward to seeing you again, I'm sure, down the road real soon. Thanks for joining us today.
Thanks for having me, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.